Hello, and welcome back to another episode of Benny Boys, where we bring you fun and informational videos about all things healthcare. I'm Nick.
And I'm Colin, and we are your professional benefit advisors with Olympic Crest Insurance, helping you get the best bennies for your buck.
On today's episode, we'll be going over some insurance basics and terms you might see in your everyday insurance plan, but you're not quite sure what they are or how they work. We'll start off with the deductible. Colin, what is a deductible?
It's a great question, Nick. Your insurance plan's deductible is the amount that you, as an individual, are responsible to pay for covered healthcare expenses before your insurance company begins to pay. Once you hit your deductible, your coinsurance kicks in, and you are only required to pay a percentage of that covered expense until you hit your out-of-pocket maximum. Keep in mind that certain plans do provide services such as office visits or prescription drugs, and those are not subject to the deductible. Nick, what exactly is the coinsurance?
The coinsurance is the cost sharing between you and the insurance company that kicks in after you've satisfied your deductible. So if you have an insurance plan with 80% coinsurance, you're only responsible for paying 20% of the covered expenses until you reach your out-of-pocket maximum. Coinsurance is different from co-pays, which are generally a flat fee for service and are not subject to the deductible in most cases. These would be things again like office visits and prescription drugs.
But wait a minute, Nick. You keep saying out-of-pocket maximum. What exactly is that?
The out-of-pocket maximum is the maximum amount of money that you will have to pay as an insurance subscriber in a calendar year for covered medical expenses. This includes things like those co-pays, the coinsurance, and your deductible. So if you had a plan with a $3,000 maximum out-of-pocket, the maximum amount of money you would pay in a calendar year is $3,000.
Let's take a look at an example.
Let's take a look at an example. Let's say you have an insurance plan with a $1,000 deductible, 80% coinsurance, and a $3,000 out-of-pocket maximum. Now let's say you have two medical bills. The first medical bill is $300, and the second medical bill is $700, bringing your expense to $1,000. Your insurance plan has a $1,000 deductible. Because of the two previous bills you've paid, your expenses at this point are also $1,000, meaning you've satisfied your deductible, and now the coinsurance will begin to pick up any covered medical expenses at 80% until you've hit your maximum out-of-pocket. Let's say you have a new medical bill that is $10,000. The coinsurance for your plan reimburses you at 80% of covered medical expenses, meaning you would be responsible for 20% of the $10,000 medical bill, or $2,000. Your expenses at this point have been $300, $700, and $2,000, bringing your total expenses for the calendar year to $3,000. The out-of-pocket maximum for your plan is $3,000. Your total expenses at this point have also totaled to $3,000, meaning any future qualified expenses will be covered at 100% until the end of the calendar year.
Today we covered the insurance basics, deductibles, coinsurance, out-of-pocket maximums, and what they mean in relation to your insurance plan.
Thanks for joining us on another episode of Benny Boys. Be sure to check us out on all forms of social media, and just be sure to subscribe to our newsletter.
I'm Colin.
I'm Nick. We're the Benny Boys.
Make it a great week.